Hi, my name is Traci Cooper, and I'm a local real estate agent here in Chico, California with eXp Realty. Today I have Shan Conry with Homes by Shan, and our goal today is to educate you about the California Dream for All program. It's an incredible opportunity for people to buy homes with assistance. We had this program launched last year, and the money went so quick, like 2 weeks, I think it was gone. So there's a lot of different things that they've done on the program. They changed the criteria, which is fantastic. So it will really help those who really need the assistance with the program. So Shan, why don't you go ahead and take it away and tell us about the program?
Great. As you talked about, this is absolutely the best way to be up to date on whether or not you're eligible for the program and help you get pre-approved as quickly as possible so you can possibly get allocation. So one of the most important things that stays the same is you're a first-time home buyer if you haven't owned a home or been on title in the last 3 years. That's the definition of a first-time home buyer. What Traci alluded to was a new criteria where there are first generation home buyers now, which means you can't have owned a home in the last 7 years, nor can your parents be current homeowners anywhere on title in the United States. So
Okay.
that's for just one applicant. So say you have two people on the application, only one of them has to fit the first generation criteria, and also one of them has to be a California resident. So these are the changes that will actually increase the opportunity for distribution of the funds. So the qualification criteria is also income. There are income limits associated with it as well. For CalHFA, the income limits are by county, and they range from 132,000 to 287,000. For Butte County, for example, the maximum income on the total application, meaning all borrowers, cannot exceed 145,000.
Wow, that's a wonderful opportunity for people.
Absolutely.
Yeah.
Yeah, the program's going to provide people 20% towards the purchase of their home, and it's 20% based on the appraised value. And it's also not to exceed 150,000, which is a great cap to the program because last time a lot of the high balance places took up all the money so quickly and they didn't have a distribution of the funds. They've changed that this time around.
Okay. Sounds like a definitely a process improvement. Let's walk through the examples that you've got outlined here. Those look really good.
Great. And this is an example from CalHFA. There's two, area medium income numbers. If you're above it or below it, and it's county-wise, there's either a 1-to-1 shared appreciation or a 0.75 shared appreciation. This model is 1-to-1. So let me go through this from a high level. You buy a house for 500,000 and you're going to put 20% down. That means CalHFA is going to lend you over a 30-year term, $100,000 loan that is deferred. You don't have to make payments towards it. If we take a fast forward into the future, the beautiful thing about owning a home is that your house appreciates over time. Now, say for example, in the future, you decide to sell or refinance that home, and now it's worth 700,000. So we're going to take the new value minus the purchase price, which means you're going to have about 200,000 in equity. So the shared appreciation means that they're going to take 40,000 of that 200,000, and then you're going to pay back the 100,000. So what you pay back to CalHFA is 140,000 of your 200,000 in appreciation. So this whole time you've owned this home, you're still making money, even though you're paying back those other loans.
Right. And that's the shared appreciation. And that's still a fantastic opportunity for buyers.
It is. And, when you pay rent, that's 100% interest. So instead of paying someone else's mortgage, this time for you to have your own mortgage and build up that financial instrument, which is recession proof. So let's talk about what it takes to get pre-approved. There's two steps. You first have to select a pre-approved CalHFA Dream for All lender, of which I am one. And then we have to fill out this pre-application letter that they're requiring this year, which actually allows us to tell them that, yes, I've pre-approved them, and we're going to go ahead and send that to them for voucher submission. So the three things that you need when getting pre-approved is credit, income, and assets or funds that you're going to use towards the purchase of the home. Well, what if you say, I don't have any funds? Well, we can take that 20% and make it work between the down payment and the closing costs.
That's fantastic. Just for clarification on that, guys. So you can take your $100,000 and use some of that money for your down. So, right? For your
Exactly.
closing cost, can you use it for closing costs?
Yes, you
Everything?
can.
Yeah, so
Yes.
it's a win-win.
It is. And
Yeah.
remember, when you put a little less down than 20%, you're subject to something called mortgage insurance. But when you have such a high down payment amount, that
Mm.
number can be much less if you need money for closing costs. So remember the first generation definition? Well, CalHFA has let me know directly that they need us to help confirm that the parents do not own a home in the United States or are on title. So we'll be asking for the name and address of the parents for the first generation home buyer, and then CalHFA will be verifying that information.
Mhm.
So let's talk about the other improvement to the program that Traci talked about at the beginning. Before, it was kind of first come, first serve. The money went fast. There wasn't equal distribution. Now you're going to get a voucher, and that voucher is going to have a date on it. And so once we finish the previous step, pre-approval, submit the application. Come April of this year, CalHFA will determine if you get a voucher allocation or not. And
Mhm.
then once you have that voucher allocation, you're going to go ahead and take the first time homebuyer course. And that's going to be free this time and online. Lastly, the best part is to get with Traci and go home shopping. Once you get that voucher, you can find a home, get into contract, and get your CalHFA rate locked with CalHFA within a 90-day period. Now, say we get into contract, you find that home, get into contract, and we lock your loan. Maybe it's 30 days escrow beyond that. That sounds like it's going to be okay, but more information to follow on that. Previously, I alluded to things being equal this time around. They're going to take the percentage of counties across the state of California and do an equitable distribution. So for example, LA might have 25% of households. They're going to get 25% allocation for that. They are going to prioritize participants that are in the lower tiers of income eligibility. So I can answer all those questions when we work on your pre-approval in terms of what those numbers look like.
Good to know.
Okay, so last but not least, as your host, we're here to help you not only run through the numbers, but Traci will help you right size the home that you're looking for that works with your budget and your dreams. Right,
Yeah.
Traci?
Yes, I think this is a wonderful opportunity for California residents. So I look forward to helping. So this is our contact information. Feel free to call, text, or email. We're both here to help. We're local. We live in the community. We work in the community. We have kids in the community. We're actually real people in the area, and we'd love to help. So feel free to reach out, and we look forward to helping. Thanks for tuning in. Bye.
Thank you.